Hey guys, welcome back to the channel. This is StockBroc. Today I'm breaking down the S&P 500's worst stocks in 2025. Since we've hit record highs about 15 times this year, I want to highlight each company, their risks, their opportunities, and some Wall Street expectations and price targets based on the current price, and kind of see if these stocks are an opportunity. Because the highlight of 2025 so far has been, of course, the AI trade, big tech, Mag 7, all the above. But the 493 hasn't performed as well as those stocks, big tech, Mag 7, all those. But there is broadening of the rally. So with these stocks in mind, let's highlight 5 companies that are down big in the S&P 500. Basically, the top 5 biggest losers for 2025. I only picked 5, so these are not the very bottom of the S&P 500, but they're pretty much close to the bottom of the S&P 500 as far as performance in 2025. Stock number 1 is TTD, the Trade Desk. The Trade Desk is a leading digital advertising platform for agencies and brands, helping buy and optimize ads online. Current price of $43.90 as of September 16th. The average analyst price target is around $91.62, more than 100% upside with the given average analyst price target. The opportunity: new AI ad tools, global expansion, analysts optimistic about long-term recovery. Risk: there's a lot of competition, fierce competition from Google and Amazon, the big dogs, and recent earnings miss and slowing ad spend. So that's a little bit concerning for TTD, but definitely something to kind of do some research on. TTD is not a stock I own, but definitely something I want to look at and see if it's an opportunity, dive into it a little bit more. But doing stuff like this kind of helps you find different opportunities instead of investing at the all-time highs for stocks. Doesn't mean you can buy high and sell higher. You want to just stay diversified and find different opportunities sometimes. Stock number 2 is CNC, Centene. This is not a stock I've necessarily heard about too much, but kind of came across it today. They are basically a managed care provider in government health programs, Medicaid, ACA, and Medicare. The current price of $32.75 this recent trading week. Average analyst price target of $35.66. So not a lot of upside for the analyst price target. Not something I'd be super interested in. For healthcare, I'm not super invested into healthcare. Certain healthcare companies I do want to do my due diligence on and learn more about, but this would be something I'd want to stay out of, so I could see why this one's trading at the bottom. But the opportunities: stable Medicaid enrollments, ACA margins could improve, potential upside if reforms succeed. The risk: regulatory challenges, lawsuit over financial disclosures, revenue sensitivity to policy changes. So if this is a company that you're interested in, of course, do your own research and learn more about it. This could be a stable company. The next one is ticker IT, Gartner. They provide market research and IT consulting for global enterprises. With a current price of $274.20, an average price target of $370, around a 35% upside from there, from the current price. Opportunity: recovery in tech spending could drive demand for research, wide analyst support. And risk: pressured IT budgets, analyst price targets range widely due to uncertainty in tech sector flow. So this is definitely an interesting stock to kind of look at. Seems like this would be a very competitive space in a market research, especially with AI, all the new AI companies coming out. But definitely could look at their balance sheet, their financials, and see if it's something you want to invest in, or if I want to invest in. But gonna keep it on my radar for now. Lululemon Athletica, LULU, famous for high-end athletic clothing and fast-growing global retail presence. Retail Stocks like this do not interest me, but that's my personal preference. There's a current price of $325.40. Average analyst price target is $374, potential 15% upside. With the slowing economy, a little concerning with this one. Opportunity expanding internationally, innovating products, upside if consumer demand comes back. And that's the big question right there. With Nike down, Adidas down, a lot of retail clothing companies are down big. Let's move on to stock number 5, Enphase Energy, ticker ENPH. I do like energy companies. Definitely want to look into more and more energies companies as I diversify more. I'm really a focused investor, but I do like staying really focused. But you do have to diversify when the economy is in a potential stagflation environment or recession environment. You do want to stay diversified and not be too over focused. So they are a solar technology company specializing in microinverters and energy storage systems. Current price target of 102.80. Average analyst price target 118.50. About a 15% upside plus. Opportunity, green energy policy and grid adoption could revive demand. Moderate analyst optimism. Risk, weak U.S. solar demand, excess inventory, sector volatility, and high valuation risk. And I think another one to add is high competition. These stocks have suffered major drops, but may still offer rebound potential. Always do your own research before investing. This video is not financial advice. Subscribe. Thanks for watching. Peace.